Trading futures and options involves substantial risk of loss and is not suitable for all investors. Good afternoon. This is Oliver Sloup, Blue Line Futures, coming to you from the suburbs of Chicago. Today is Wednesday, October 29th, and a little bit of a choppier trade in some of the agricultural commodities outside markets. A little bit of a choppy trade there ahead of the Federal Reserve meeting where they are expected to cut interest rates. Fed Chair Powell will speak after that, and what he says will probably be a little bit more impactful for the markets. But since that is in the future, we'll focus on what took place in the grain and livestock markets here in today's trade. Before we do that, I do want to remind you about our daily commodity commentary. If you have not signed up for it, you can head over to bluelinefutures.com here, and from here you click on this sign up button, and that should take you to this form where you can submit your information to get that emailed to you each and every morning, and select the markets that most interest you, whether that be grains, livestock, metals, energies, indices, etc. We've got a great team in-house that puts out a lot of great information each and every day, delivered to your inbox. And then if you ever have any questions going over that in the mornings with your cup of coffee, don't hesitate to reach out. Our trade desk is ready, willing, and able to help. We will be doing our charts again today on the Blue Line Edge trading platform, so if you'd like to try a demo of that, you can go ahead and do that on bluelinefutures.com as well. Very user-friendly, desktop and mobile, whether you're charting, trading, or just monitoring quotes and positions. It's a great tool to have in your pocket. Now that we got that out of the way, we can get into some of the charts that were really catching our eye in today's trade. And again, a lot of it's going to be agricultural based. If we can get things started on the December corn contract, it looked like we were going to soften up a little bit this morning. We pulled back, but then finished the day on higher ground. Still an inside day, trading within yesterday's trading range. So a healthy, constructive chart. Looks like we closed out above trendline resistance. That keeps the door open for continued upward momentum. And from here, you're going to really want to look at previous highs. And that goes back to July 3rd, where we had a high of 442.25. So if we're able to sustain ground above this green box here, that would be the next line in the sand as far as upward targets go. The path of least resistance has and continues to be higher as we mark higher lows and higher highs. So a few different technical tailwinds for the market, moving averages turning up as well. So all things look very, very constructive in the corn market. And then over on the soybeans, that's really been the big mover and driver over the last week and a half, as market participants had rumored that China was in the market for U.S. beans. And then yesterday afternoon, that was confirmed. The market didn't really respond much. Clearly, buy the rumor, sell the news type of event. And like corn, trading within yesterday's range. So you're seeing some of that volatility come out. I think a lot of people were expecting to see those headlines. And from here, are they going to continue to buy soybeans, or was this just a one-and-done type of deal? Time will tell. But we are a little bit overextended here on the chart. The RSI is in overbought territory, and there is a gap on the chart. Not to say that we have to fill that gap, but if we fail to hold today's low in tomorrow's session, that comes in at 1085.25, I wouldn't be surprised to see that trigger maybe a little bit more long liquidation in the near term. And in our daily grain commentary, we kind of talked about deciding what hat you're going to wear. Are you a trader, or are you a producer? If you're a producer, you'll probably be a little bit more proactive in playing defense to protect price at these 15-month highs. If we can stay above yesterday's high in this red line, which really goes back to resistance in February and again in June, that certainly bodes well for the market. But failure there, again, I think opens the door for some long liquidation. Now, over on the wheat side of things, very constructive day. Like corn and soybeans, though, it was an inside day as we stayed mostly range-bound within the prior day's trading range. Up against significant resistance here, 534, 536. If we're able to get out above there, just above there is the 100-day moving average at 538.25. If we're able to chew through that, I think things could maybe accelerate to the upside. This is a market where funds have had a net short position for several years on end. So if we're able to get some good technical moves above resistance, potentially that sparks additional short covering from the funds. Failure to do so and a failure to kind of gain new ground above these technical barriers potentially sets us back into a range. But as with corn, we're marking higher lows and higher highs, and that continues to be constructive. And one of the things we also talked about earlier this week is The fact that we're seeing these grains work together, I think, is very constructive for more intermediate to longer term trends. What we don't want to see is one grain market trading higher and the other is trading lower. It's kind of a push and pull factor, but when they're all moving in the same direction together, I think that's where you get more stable money flow trends that could potentially lead to a more sustained rally over time. Is it going to be a straight line? No, it never or rarely is, but I think higher lows and higher highs will continue to be the trend there. So looking at potential dips as buying opportunities in those markets with clients who share the same bias. Now, over on the livestock side of things, that continues to be a hot topic. In today's livestock roundup, we talked about yesterday's kind of capitulation-like trade, potentially signaling a near-term bottom. The volume, specifically in the feeder cattle market yesterday, was just off the charts, and that after having consecutive days with lock limit prices. So basically, all the longs were able to get out of those positions and trade. A lot of them puked, whether they pulled the trigger on their own or were forced out by risk management. That typically leads to some capitulation where you can get a little bit of a near-term bottom. And that's certainly what we saw today. And then on top of that, we got rumors that the Mexican border may remain closed and they may not open it. Where if you remember just a couple days ago, part of the risk-off trade was that they were going to reopen the border. So again, a lot of headline risk in both directions in this cattle complex. Daily ranges are off the charts for live cattle. It's about 472. Feeder cattle, 807. Just wild. So when volatility expands, position sizes should shrink. Risk management is very, very key. But after the recent sell-off, I think we can get a little bit more of a trade. I think we could get a little bit more of a bounce. But similar to how there's a Fed put or a Trump put in the stock market, it almost seems like there's going to be a Trump ceiling in the cattle market, where if we get too big of a rebound in this cattle market, and the government's there to take action to try to put their thumb on the scale and lower beef prices. So that's going to linger in the back of fund managers' heads, whether they can do that or not. You could go back and forth and argue about the semantics, but the fact of the matter is they're going to take that initiative and they're going to keep trying to move it forward, which I think keeps money managers nervous from being overly aggressive long here in the near term. So that's what we're looking at. If you've got any questions at all, want to discuss strategies or talk about platforms or anything else, please don't hesitate to reach out to our trade desk. We are ready, willing, and able to help. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.